This is your LMAX Exchange Technical Update, November 3rd, 2016. Euro dollar. So now that the euro correction is extended back into the 111 area, there's good reason to expect that the market will stall out within this broader downtrend and look to carve out a lower top over the coming sessions ahead of fresh downside back below the recent lows at 108.52. The market stalled out on Wednesday at around 111, that previous support area, after breaking just above it to test some key resistance in the form of the 100-day and 50-day moving averages. So now that this confluence level is tested just in the 111 to 111.50 area, an ideal lower top is sought out at a fresh downside. At this point, only back above the 112.50 to 113 area would take the immediate pressure off the downside. Sterling dollar. So cable saw an interesting break to the top side after trading sideways for several days, managed to take out the recent range high at 23.33. This could set the stage for an acceleration of gains on Thursday, but again, the market would really need to establish a daily close above 23.33 to confirm such bullish bias. Until then, the broader consolidation does remain intact and the broader downtrend is firmly intact, with only a break back above 27.96 to ultimately take the pressure off the downside. There is risk for a lower top and fresh downside back towards 31-year lows down around the 120 area. Dollar yen. So dollar yen stalled out in recent trade after establishing above 105. The market was unable to really hold above that psychological barrier and has come back down to trade back below some key support around 103.15. It'll be interesting to see if the market establishes below 103 on Thursday. If it does, then it could put a pressure and open the door for a retest of the 2016 base at 99. At this point, a push back above the recent highs that we saw all the way up at around 105.53 would be required to put the pressure back on the top side. Euro Swiss. So Euro Swiss is broken down in recent trade below 108. That's a significant development given the range that had been pretty much well defined between 108 and 110. At this point, it'll be interesting to see here if the market can stay below 108 or if it establishes back above that figure over the coming sessions. If it can establish back above, then we're back to talking about a range trade that potentially is continued to be defined between 108 and 110. If not, and the market breaks back down lower, we could see a retest of the 2016 base at 106.24. Aussie dollar. So with Aussie, the story is pretty much the same. The market continues to be very well capped on rallies up towards and above 77, but at the same time has been content on being very well supported on dips. At this point, the market could be putting in some form of a top, but it'll need to take out the low medium-term support at 74.21, which is that low going back to the 27th of July. Dollar CAD. So dollar CAD has been highly constructive, and this latest break above 134 sets the stage for the next major upside extension into the 135 to 140 area over the coming days and weeks. At this point, any setback should be very well supported down towards ideally the 131 to 132 area, while ultimately only back below 130 would compromise the constructive outlook for dollar CAD. Kiwi dollar. So the New Zealand dollar has seen a nice break to the top side in recent trade, but overall it still looks like this market is in the process of topping out in 2016, with any rally seen well capped up towards 75 in favor of the next downside extension below psychological barriers at 70 and towards the 66 area, which is medium-term support further down. SPX 500. So the S&P 500 has taken out some critical support this week. That's 2108 September base, and this sets the stage for the next major downside extension back towards a retest of the June base, which comes in at 1990. Any rallies now should be very well capped, ideally below the 2150 area. Gold. So gold continues to confirm the constructive outlook, with the market looking to put in a higher low around 1240 in favor of that next upside extension back towards and eventually above the 2016 high at 1375. At this point, only back below 1240 would compromise the constructive outlook for gold.